Hey everyone, this is Kirk here again at OptionAlpha.com, where we show you guys how to make smarter trades. And today we're going to cover all of the closing trades and adjustments that we had for Tuesday, August 11th. I'm sorry, Monday, August 11th, just to start the day. And so we had two closing trades with calendars today, and then one little bit of a different adjustment to our LinkedIn trade that we had. So we'll cover that here towards the end of the video. So as always, if you guys have any comments or questions about any of the trades we make, feel free to ask them right below here in the comments section. I'll make sure I get to all of those. So it's actually been a pretty good month trading calendars, and calendars are obviously, something that you do in a low volatility environment. So when the market is trending or when you don't really, have a definitive directional play with volatility, calendars are a really good way to go to kind of help pin certain areas of certain stocks, either higher or lower than the market. Now, how we like to trade calendars, and you can go back through some of the video tutorials, is we like to trade them a couple strikes out of the money and make them more directional. So we want the stock to move, whether that's a little bit higher, a little bit lower, whatever the case is. And we've been really profitable trading calendars this month for two main reasons. One, all of the stocks that we traded with, the calendars that we've closed out with profits, have kind of moved right towards our strike that we're pinning. So in this case with FXI, that'd be the 41 calls, and with FXE, that'd be the 132 puts. So all of these have moved pretty much right towards that strike as we get further into August expiration, which really helps. And then two, we've seen generally higher implied volatility across the board. So these options are generally going to see this back month or September start to get a nice little boost, or at least not as much of a decay in its value, which helps widen out this calendar as far as premium and creates this better credit that we closed out of these two at today. So generally the theme with these calendars is you want obviously the stock to move right where you are expecting or within that range, and then also a move up in implied volatility doesn't hurt your position, and in fact is going to help your position. So with both of these calendars, let's go over FXI first. So we sold back to the market our two September, August 141 calls. So originally we were short the August 41 calls, and we were long the September 41 calls. So same strike, just different contract month. Now we close this out, so we bought back the August 41 calls and we sold out of the September 41 calls for FXI. All in all, we took in a credit of $69 on each of these, so took in a nice $27 profit on this one for each of these calendars that we got out of. So for FXI, here's the chart, and you can see that the stock moved exactly where we wanted to. So 41 was kind of the pin strike that we were targeting, and that's almost exactly where the stock moved. It did it earlier in the month, which was fine that it did it earlier, but that didn't really give us an opportunity to close at a profit because it was so early in the expiration cycle. And now that it's kind of gone through a little bit and kind of come back right up to that same price point, it's given us a really good time to see that front month option or that August option start to decay in value as September expands in value, giving us a wider spread or premium. Now you'll also notice that since we entered this trade, implied volatility has gone higher for sure. When we entered it originally, I think implied volatility was down in the teens as far as IV rank. Now it's up at 38, obviously because the stock is starting to make a little bit bigger of a move. So again, that doesn't hurt our position, actually really helped our position overall. So FXE, same thing with FXE. We went ahead and sold back to the market our September, August, but this time instead of trading the call side, we traded the put side with the 132 puts. So everything was pinned right around 132. Sold this entire calendar back to the market for 63 cents. Made $15 on each of these, but since we had four, it was a nice little profit again. Just kind of continuing to bank these little profits all along the month. For FXE, had a really tough month and continues to stay lower, right down here at 32, right? Not really going anywhere, continues to move inside this range. And for us, really it becomes a matter of closing out this calendar before expiration, because there's only 4 days to go in August expiration, and right now the stock is exactly at our strike that we're pinning at 132. We don't want to take a risk of trying to eke out every last ounce of this trade or kind of squeeze out every last amount of premium, because it can obviously expand in premium and become more profitable, but the stock has to basically go nowhere in the next 4 days. So at least at this point, we're going to take our trade off, and that's a good thing you should do with calendars. Is you start to get a little bit of a profit in these things, try to take these profits a little bit earlier in these calendars. If the stock moves exactly where you thought it was going to move and kind of sits there for a little while, don't expect for the stock to finish out the month that way. So in our case, we're not expecting FXE to finish out the month all the way at the same 132 price point. So we're taking what the market gives us and closing out the trade, bank that profit, and just move on to the next one. All right, so last one we're going to go over is our adjustment in LinkedIn. So here's the story with LinkedIn. For those of you who are new, obviously we've had a lot of new people sign up since our last trade in LinkedIn. We went ahead and did a very wide 215, 190 strangle around LinkedIn since it moved against us at earnings. So since LinkedIn jumped higher at earnings, we kind of recentered our strategy, not trying to make a profit on this, but trying to reduce our overall loss by trading this 215, 190 strangle around LinkedIn's price. Well, LinkedIn has moved higher, which is fine, and now this 190 put is virtually worthless. So today, what we did as an adjustment is we got a little bit closer to the market via selling a 205, 190 credit put spread. So this is not a new order, it's an adjustment to an existing order. And in this case, we went ahead and sold the 205s, and with this vertical put spread, we bought back or closed out of our 190 puts. So we went ahead and banked a little profit on the 190 puts, turned back around and sold the 205, so got a little bit closer because of the move up in LinkedIn, and took in a credit of 98 cents after everything. So after closing out the 190s, reselling the 205, we took in a credit of 98 cents, and again, I say rolled up the 190 puts that we had originally. So if we actually go to the chart here of LinkedIn, you can see exactly what's going on. Implied volatility is still very, very low for LinkedIn, which is good. But as you can see, the stock moved against us, and our current call spread is definitely deep in the money. We don't expect to make anything off of that. Obviously, that part's going to be a loser. Again, what we're trying to do here with this strangle is reduce our overall loss from a $700+ loss, hopefully to somewhere around a $400 or $300 loss, which would cut it in half and then some. So as LinkedIn has continued higher, we originally had the 215 calls, which are now being tested just a little bit to the top side, and we originally had these 190 puts, which are right about here. So what we did is we closed out of these 190 puts and came all the way up to 205. That gives us a lot closer window of opportunity here, but we only have 4 days to go until expiration. So very limited time for LinkedIn to move and to trade. And obviously we can make adjustments, and even if we need to, we can roll this thing out to September expiration if required. But right now it's looking pretty good. We just need LinkedIn to move down just a little bit here over the next day or so. If we go to the risk profile here for LinkedIn, you can see where we have this position currently, and you can see where that kind of strangle is right around 215, 205, and that's generally in the probability window that LinkedIn's going to trade in the next 4 days. So by the time we get to expiration, it should trade somewhere between 220 and 205, and our further strikeout here starts to lose a little bit of money at 215, but we can always, like we did with the 190s, roll up closer to the market as we get closer to expiration and really kind of choke and squeeze the market into a certain price point and range before expiration. Again, the whole idea here with doing this strategy is not to make money on this trade. We know this trade's going to be a loser, but if we can whittle this eventual loss down from a $700 potential loss originally when LinkedIn had earnings to, again, maybe a $400 to $300 loss, that to me is the essence of trading, is taking these trades that go really wrong and being able to manage them strategically to turn them into trades that either not as harmful or become profitable trades. Now, if you can't do this trade because it is naked on either end, so we do have a naked call and a naked put on either end, what I suggest doing is doing something like an iron condor. So if you sell the 205, buy the 195 that's a little bit cheaper. You are definitely not going to take in more credit than we did. You will have to pay a little bit more money to do that, but that's what you're going to have to do because you are not you don't have the account trading level or the account size to do this naked, which obviously is going to help out just a little bit more. But you can absolutely do an iron condor instead of a strangle. So you would do something like the 205, 190 on the put side, and maybe the 215, 225 on the call side. So buying the 225, and that creates no risk after 225, which then you're able to do in most accounts because it doesn't have this naked option feature. So that's really our trade for LinkedIn. Again, if LinkedIn continues to move higher, what we'll do is move up the put side even more. And if things get really, really hairy and we have to move out to September, we'll do that. We'll continue to roll this thing out to September, buy ourselves a little bit more time, and continue to manage this trade until we've kind of whittled it down enough to close it out. As always, if you guys have any questions or comments about the trades we made today, please let me know. Ask me in the comment section. I'll get back to all of those tonight or tomorrow before the open. If you're watching this video on YouTube or somewhere else publicly, you just have to understand that these alerts and this video that you're watching right now does not come out until 15 days after it's sent out to our members. So you're about 15 days behind the 8 ball. You're not getting these real-time alerts. You're not getting this video the same day that we make these trades. The only way that you can get all this stuff is to sign up at optionalpha.com. Happy trading.